the informed investor. Thanks to Century 21. Smarter, bolder, faster. Go to century21.com.au.
Charles Tarby's the chairman of Century 21 Australasia, joins us every Monday to talk property, take your calls, talk about investing as well. Hello, Charles.
Good evening, John.
I'm looking after the show for Steve Price, of course, this week, for those who have just joined us. But you're here, as you always are, and there's a big report on property that's come out, which is talking about house price declines. What do you make of this one?
Look, it's certainly something we expected, and it's certainly nowhere near what the reports have been on media or certain parts of media in the last couple of weeks.
Yeah, we need to say there was a report talking about something like 40% fall in house prices. That's been, I think, even by some of the people who spoke in that report, are saying, well, actually, that's not what we were saying. We had it heavily qualified. So, yeah,
you're absolutely right, John. I think even one of the gentlemen that was interviewed said, the only time I'll speak to the press next time is with somebody reputable or something along those lines.
Yes, that's right. So they weren't happy with the way their comments were treated. So, but look, I think it's all been put into some context. But the market is cooling, isn't it?
Look, it is cooling, but it's cooling for a couple of reasons. It's not just the fact that we hit a very, very high peak in the boom, and Steve and I have spoken about this quite a lot. As far as I'm concerned, the boom stopped about 24 months ago, John, but with interest rate reductions that kicked in with the Reserve Bank because of the economy, not because of real estate, it spurred people on, and a lot of people paid a little bit more than they should have. And there was that constant fear of missing out. But the reality is that the Royal Commission into Banking has had a massive impact. A lot of people don't realise this, but we're watching people coming through properties right now who are willing to buy property right now, but the banks are not approving every loan in the same manner that they used to. So there's a bit of a double whammy. As well as a change in pricing, we've got the Royal Commission impacting on the way banks are behaving right now.
Yeah,
probably...
You're at the end because you see this at the coalface, and we hear these anecdotal, this anecdotal evidence of, for instance, people seeking a loan, and the bank saying, "Well, can you just explain why you've got Netflix HD or the higher level of Netflix and not the smaller one?" Are they doing it to that extent?
They are very, very careful in the way in which they are approving loans, and I can say that from a personal perspective as well, John. I have a very strong working relationship with a couple of banks, and I'm normally accustomed to being very flexible the way I do things. Of recent months, I've had to go through a series of processes which I've never had to go through before, and I think nowadays that the word equity, which was the big thing we talked about, getting that capital growth and having equity to go to the next property, it's nowhere near as powerful as it used to be. It wouldn't matter if you were buying something and between the two properties, the one you have and the one you want to buy, your loan-to-value ratio is only 50%. It doesn't matter anymore. It's about the affordability issues, and they're very, very careful. Equity is not king anymore.
Yeah, so they want to know that you can actually pay, and they want to know that you'll be able to pay if things go a bit sour and you've got to pay slightly higher interest, that kind of thing.
Oh, look, it's so different. When I first started buying real estate back in the 70s compared to now, the finance in the 70s was tough to get, but you could get it on a 90% or a 95% loan value ratio. But today, it's a very, very different world. And I think that the Royal Commission has had a much larger impact, not so much on the banks, but on the people wanting to borrow money than I've ever seen it before. There are plenty of buyers turning up at inspections. There are plenty of people turning up at auctions, but not everybody is bidding.
I mean, Atlassian, there are two of them who've made a fortune, online internet moguls, if you call them. One of them's bought the Fairfax estate for $100 million.
I saw that.
But you get the impression, based on their wealth, as it's reported, that the bank probably wouldn't have had too much of a problem giving them the money. They might have even bought it cash. Who knows?
I think that there might have been that potential. When you look at the fact that clearance rates on property across the nation has dropped below 50%. Mind you, we've had a long weekend. We've had a couple of grand finals, and Melbourne is traditionally the largest auction city in the country, they only had 69
Yeah.
auctions on the weekend, John, and normally they have 11 or 1,200. But I think that at the $100 million property, I don't think money was an issue there. We might have heard about it if it was the case.
Yeah, I think so. And look, in terms of the market and where the market's going, particularly in Sydney and Melbourne, if it tails off, it means first home buyers, it might be more in reach for them. So the people that would be affected by it are those who maybe have bought investment properties perhaps and cut it really fine. Would they be the ones in trouble?
Yeah, that's correct. Everybody has a turn. I think people who might have bought in the last 24 months, if interest rates move up slightly, and rent prices are on the downward trend, which they
Yes.
are in Sydney, you put those two together, there could be some issues with investors in the very, very near term.
They'd be the ones that would be in some strife. I guess from the point of view of first home buyers, if investors then have to sell their properties, there could be more properties on the market for the first home buyers. Is that the thinking here?
And that's the problem. There's also a lot of property that won't complete. There's a lot of property coming out of the ground that people bought off the plan, and
Yes.
they're not going to be able to complete because valuations are going to come in lower than what they purchased the property for. And unless they can come up with extra cash, they're not going to be able to go ahead.
And there have been waves of that in the past, haven't there, Charles, where people have got themselves into terrible trouble there?
Terrible trouble. We saw that starting, the off-the-plan sales. We started warning people about this around about 15, 16 months ago. We saw that as a big issue. But, of course, interest rates are so low and rental returns pretty good. People just got a little bit too, I think, too gung-ho.
And they find themselves, don't they, Charles, they're better off just waving their deposit goodbye than proceeding, aren't they, in some cases?
And that's what some people are doing.
That's terrible.
I just hope they don't blame. Look, I obviously, as a real estate practitioner, we want people to make money out of real estate over the long term, and that's why we started ringing the warning bells quite some time ago to make sure that people weren't buying above their means, because we could see the valuations. As you know, John, this happened 7 or 8 years ago.
It
and
did,
the valuers were the one that copped the blame, and it wasn't their fault. But they were the ones that got sued very heavily over.
Yeah, I've got people I know in the business who've talked about that, the heartache from 7 or 8 years ago, so it really is worth repeating that today. You've been talking about it for a while, so I hope we're not going to be talking more of that in the future. Charles, great to talk to you, and you'll be with Steve again next week. Thank you so much.
Thanks. Good night.
Charles Tarbey there, who's the chair of Century 21 Australasia.